Welcome to The Explainer, where today we're going to crack the case on one of the biggest little mysteries in business, bank reconciliation.
It's a classic head-scratcher, right? You think you know how much money is in the bank, but then the statement shows up and tells a totally different story. It can feel, well, super confusing. But I promise you, there's a simple, logical reason for it all. And today, we're going to solve this thing together, step by step.
So for the next few minutes, I want you to think of yourself as a financial detective. You're the lead investigator on this case. Your mission? To figure out exactly why these two stories, the one your books are telling and the one the bank is telling, just don't line up. Trust me, the clues are all there. You just need to know where to look.
All right, let's dive right in. Every good detective starts with the evidence, right? And for this case, we've got two key pieces of it.
Okay, the very first clue is getting your head around this one big idea. Your cash book and the bank statement are basically mirror images of each other. See, to you, the money in your bank account is an asset. It's yours. But to the bank, that same money is a liability. It's cash they owe back to you. And that's why the accounting looks completely backward. When money comes in, you debit your cash book because your asset went up. But the bank, they credit your account because their liability to you just went up. It's the exact same event, just seen from two totally opposite points of view.
So that's the absolute key right there, this difference in perspective. What you see as a plus, they see as something they owe. And once you really get that mirror image relationship, I'm telling you, the rest of this whole puzzle just starts to click into place.
All right, our investigation officially begins. First up, we're hunting for transactions that the bank knows all about, but you haven't put in your cash book yet. You know, these are the items that just kind of show up on the bank statement and make you go, wait, what's that?
The first suspect? Bank charges. We're talking about those little fees the bank takes right out of your account for their services. They're super easy to miss, but trust me, they add up. And they will always cause a mismatch until you get them recorded in your own books.
Next on our list are the automatic payments. And here's a simple way to think about them. A standing order is when you push a fixed amount of money out on a schedule, like for your rent. A direct debit is when you give a company permission to pull a variable amount, like for a phone bill that's different every month. The point is, they're both automatic, which means it's really easy to forget to enter them into your cash book manually.
And then, of course, there's the good stuff. Credit transfers. This is when a customer pays you directly and that money just pops up in your account. So you've got this cash, it's sitting right there in the bank, but maybe you have no idea it's even landed until you check that statement.
So, how do we deal with all this? Well, the first step in our investigation is actually pretty simple. You're going to grab your bank statement and your cash book and put them side by side. Go through them, line by line. Anything you see on the bank statement that's not in your book, circle it. Then you just add all those missing items to your cash book to get it up to date.
And here's a perfect example of how that works. Look, we start with our original balance, $3,350. Then we add in that nice surprise $400 credit transfer. Next, we have to subtract the $100 in bank charges. And voila, we get a new updated cash book balance of $3,650. That is the real amount of cash you have to work with.
Okay, phase one of our investigation is done. Nicely handled. Now, let's move on to the second group of suspects. These are the complete opposite. Items that you've already recorded, but the bank just hasn't processed yet.
We're talking about unpresented checks. So, you write a check to pay someone, you immediately record it in your cash book, and in your head, that money is as good as gone. But what if the person you gave it to hasn't cashed it yet? Well, as far as the bank is concerned, they have no idea that check even exists. So that money is just sitting in your account untouched from their point of view.
And of course, the exact opposite can happen too. Let's say a customer gives you a check. You deposit it right away and you add it to your cash book. You're thinking, great, my balance just went up. But, it takes a few days for the banking system to do its thing and process that check. So until it officially clears, it's not going to show up on your statement. We call these uncredited deposits.
Now, this is super important. These things are not errors. Nobody made a mistake here. Not you, not the bank. These are just normal timing differences, little delays in the banking system. They're temporary hiccups that will sort themselves out in a few days.
So, let's recap. We've gathered all our clues, we've updated our cash book with all the stuff the bank knew about first, and we've identified all those pesky timing differences. Now, detective, it is time for the big reveal. We are ready to prepare the bank reconciliation statement. This right here, this is the final step that solves the whole mystery. It's actually pretty straightforward. You start with that new, corrected balance from your cash book.
Then, you add back the money for any checks you wrote that haven't been cashed. And after that, you subtract any deposits you made that haven't cleared yet. And if we've done our jobs right, the final number should match the bank statement balance perfectly.
Okay, let's watch the magic happen. We start with our updated cash book balance, our true cash position, which is $750. We then add back the $250 for that unpresented check, because remember, that cash hasn't actually left the bank yet. That gets us to an even $1,000. Now, we subtract the $160 deposit that the bank is still processing, and what do we get? $840. Look at that, a perfect match with the bank statement balance.
And just like that, case closed. The mystery is solved. See? By systematically going through what the bank knew that you didn't and what you knew that the bank didn't, the numbers line up perfectly. No more confusion. Just pure, simple clarity.
So we've gone through all this detective work, and everything matches. But you might be sitting there thinking, okay, but why does this actually matter? Why go through all the trouble?
Well, it matters a lot. Because a bank reconciliation isn't just some boring accounting task. It's a vital health check for your business. Think of it as your first line of defense. It helps you spot bank errors or even, unauthorized transactions and fraud before they turn into huge problems. It makes sure your records are spot on, which is the bedrock of making smart business decisions. And maybe most important of all, it gives you the one number you can absolutely count on, your true cash position. So you always know exactly where you stand.
You see, solving this bank reconciliation case, it's really just the first step. It's proof that with a bit of systematic detective work, you can bring total clarity to your finances. This is just the beginning. Every single number in your financial statements tells a part of a larger story. And now you've got the skills to start reading it.